Hello and welcome to an episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. Hope you all had a wonderful Christmas, New Year, whatever festivities you happen to celebrate. However, there is no rest for the wicked. We are back full throttle because it is the Bitcoin spot ETF decision week and probably a lot of volatility to come with it. So as far as the high time frame landscape goes, unsurprisingly, not a lot has changed. We've had the monthly close, but it's pretty much in the same area as most of our discussions in the weeks prior. I think the only somewhat relevant monthly level is between 44 and 47k. I think it's an okay level. It's not like a mega inflection point because by definition, it is closer to the range midpoint rather than a range extremity. But that's probably the best thing that we've got in terms of the relevant structure. Realistically, if you're looking for monthly timeframe signals or swing trades, then your best options are either a dip towards support closer to the mid 30s or a break towards 50k, which flips the 44-47 midpoint from resistance to support. Those are your best monthly options. Absent that, you're not going to be getting signals from this time frame at the moment. If anything, it's just kind of at resistance right now, but as we've seen recently, the monthly closes at resistance haven't been super strong, especially given the close through the level and a decent chunk of continuation. But yeah, 43, 47, whether it's the monthly or you look at that on the weekly or the daily or what have you, that is the contextually relevant level. I will take a step back and say that technical levels don't currently have the bulk of my attention. I think that there's so much anticipation of the spot ETF and the market's reaction to it, as well as obviously the decision itself, that contextually speaking, I would give more weight to news and post-news flows rather than the precise technical levels. We will talk about some ideas that could come to fruition around the event itself if you wish to trade it, but that is an important sort of caveat that, especially with big news events like these, liquidity tends to kind of vanish, or at least, market makers, they want to get caught offside like a massive decision. So books are thinner, which means that market orders have a larger impact. You have bigger wicks and all that type of stuff. I will also say that from a trading perspective, given that this is one of those, we don't know exactly when the news is going to come. There's no set time for it. It's not completely telegraphed. We know the range of days. It's not the type of market conditions where I would be happy to just leave limit orders close to the market and go chill. This would, I think, warrant much closer and much more active monitoring. The easiest solution, of course, is to just wait for post ETF and see what the market's reaction is like, see what the flows are like, and just kind of reassess from there, especially given how long this has been cooking. I think from a swing perspective, that's a very reasonable point of view. But as traders, no one should lambast you for wanting to trade around the event itself. But I think if you're much more conservative or higher time frame, what have you, there's really no harm in waiting post ETF, especially if you don't have sort of specific trading mandates or anything of that nature. That's the monthly time frame. The big dips towards 30, 35. The immediate level on top of us, 44, 47, and then the big breakout, holy shit, fuck the midpoint, we're just going to keep going up. Everything is bullish continuation. I mean, self-evident 60k range high. Now, the weekly time frame embodies the consolidation of the last month quite well. I think the daily does a slightly better job, but the weekly also. That ever since we had the sort of breakout candle early in December, and we've essentially gone sideways for a month, and we're sort of poking up again now. But this is a very clear sort of sideways consolidation structure. The funny thing about these consolidations is that in general, depending on your bias, if you have one, you'll see whatever you want to see. So if you're bearishly inclined, your argument is that, well, look, we made a high, low, lower high, and so this is going to peter out. As long as it doesn't break this, that's going to be another lower high, and then back towards support, maybe even breaking it, and so on and so forth. And the same logic actually applies for bulls. And the argument in that instance would be that this is a low, this is a higher low, and we've already tested this area 1, 2, 3 times, and this is the ETF announcement breakout move. So that's sort of the peril of reading into consolidations too much. I will say that I think it's skewed on the bullish side simply because this consolidation follows a move higher. So in general, impulse consolidation, impulse in the same direction is more common than impulse consolidation, reversal in the opposite direction. But this is kind of neither here nor there. This isn't some super important TA thing. I'm just pointing out sort of how these consolidations work. And I don't think levels are super worth it on this specific occasion. The 4-hour and daily timeframes have been particularly sort of rangy and choppy and on the messier side. Sometimes you can have very clean daily consolidations, and on the lower timeframes, that range is quite tradable and its boundaries are respected. However, on this occasion, you kind of have two ranges within one, and it's been slightly messy, as you'd expect from the holiday period on the lower time frames. So realistically, I think, unless you're trading around the news event itself, in which case, open season on lower time frames. Otherwise, I would take guidance from the daily and the weekly more so than the sort of hourly and below. So yeah, the other point I wanted to mention as far as the ETF stuff, realistically speaking, if you want to be trading the approval, if that's the way the market goes, and giving it a chance to burst higher, then that's going to have to be one of those setups where you're at your desk and reacting. And realistically speaking, unless you've got some sort of information edge or just the requisite infrastructure to act very quickly, your best bet is going to have to be some version of just breakout buy, hope your fill isn't garbage, and hope your leverage isn't that high that you get wicked out. That's really the only sort of game in town when it comes to that, especially given the amount of eyeballs on this ETF news that's coming up. That's going to be a pretty difficult trade. Also, not to mention, as mentioned previously, when you have news events, liquidity is drier and there are fewer limit orders in the books, so market orders have a larger impact, you have larger wicks, all the stuff that we talked about in the past. So that also sort of increases the risk of those types of setups. In general, if you're going to be news trading, you want to let the volatility do the work for you and not the leverage. If you want to take advantage of that type of setup, you just have to be very quick and hope you're not too late. And from a technical perspective, there really isn't, it's not a technical type of trade. It's more of a news trade. Sometimes they work in tandem. A lot of the times they don't. If you wanted to sort of add a technical layer onto it, realistically, you would just look for some sort of nearby breakout level or diagonal structure. So depending on where the market is around the time of the news, it could, for example, just be a sort of local range high or extremity of some sort, and you'd be looking to breakout trade through that. Alternatively, you could be looking at some sort of diagonal structure, again, drawn very imperfectly just to demonstrate the idea. You'd be looking for that, and then your news trigger would ideally sort of super boost or juice up the shitty technical setup and make it not shitty. That's kind of how you essentially have to go about those types of news trades. I would say that if you're looking to trade the other side of the news, which is to say that sell the news or just de-risk on that type of event, there are two trades that come to mind. They're quite tricky. The first one is to fade an outsized move higher somewhere into resistance. The difficult part there is if the news is really good and there's a lot of buying and there are no passive sellers in the book, the market can wick like really fucking high before going back to something reasonable. So, if you start selling too early, especially if your leverage is high, the chances that you get wicked out, stopped out, liquidated by being too early, fading an illiquid move, that's like a really easy way to lose money. So I'm not a fan of that in general. I think if you're going to look to sell the news in one form or another, unless you're getting like a god tier wick entry, just very high conviction that the market has no business being at this price, the alternative to that is to wait for some sort of backside retest or catch the second part of the leg on the rotation the other way around. So for example, if we take, just as a random case, this daily trend line in one form or another, or this sequence of lower highs, it's not even a trend line, right? Something like this, just to make a technical point without being too specific. And let's say the market breaks out and moves even higher on the ETF news and then sort of peters out, starts getting sold, and then breaks back within that structure. You'd essentially be sidelined for this portion, and then your trigger entry, the idea becomes alive or comes to life rather, once you fail the breakout around the news event itself from a price perspective. And then you'd look to trade a rotation lower in one form or another. So that's the sort of diagonal example. You could come up with horizontal ones if you wanted to, which is to say that this is, if we take this highest close as the breakout level at 44K, and the market keeps grinding up, and you get approval and like a big spike, you'd essentially be you wouldn't be selling it up here and or however high it goes, right? And then only when the market gets back below the breakout level or starts rapidly approaching the breakout level in like a very sell heavy candle that no one seems to be buying and driven by liquidations, then you could say, okay, well, whatever this portion was, I don't really care about, but now that it's failed the breakout, that's my trigger, and I finally got an invalidation on this and I can look to trade it lower. So those are the two options on the sell the news type of stuff. You're either waiting for like a god wick entry, but that's very tricky because illiquid market and it can go much higher than you think, and in general fading those, you can get run over basically, and it's a bit of a trickier trade. The upside there is you're right immediately if you are right. The downside is if there's an illiquid stampede, you get stretched out. The other option is to wait for the market to form some sort of failed breakout structure. That removes the risk of basically fading it too early and the market just going way higher. But it does mean you are quote unquote late to the rotations. That would be either a failed breakout and, this sort of backside entry is what you're looking for. Or in the diagonal example, you let it break whatever sequence of lower highs, and only when it fails back above are you looking for a setup. So again, the upside there is that you're not going to get trampled. The downside is that you're late, and if the market ends up being bullish, then there's no second leg to be had, right? That would just go up. Realistically, I'm not a huge news trader, especially given how popular news trading has become and automation, all that type of stuff in the past year. I would be very hard pressed to argue in good faith that I have an edge in news trading. If anything, it would be one of those higher time frame weekly, daily swing setups I talked about becoming attractive, or one of the slower moving daily, weekly, like, okay, we've broken out, but what are we doing now? Type of things. Those make sense to me. If you want to jam the market around the headline itself, I think that's cool. Just again, my best not financial advice would be to let the volatility do the lifting for you and not the leverage, because leverage in those types of situations, unless you really know what you're doing, God forbid you're caught flat-footed on that type of stuff on cross margin, then might be over for your account, and that's just really not worth it. So that's the BTC side of things. I don't think I've got anything else to add. Hopefully that was somewhat helpful. On the ETH front of things, as we've hopefully argued somewhat cogently on Technical Roundup, if there's ever a time for ETH BTC strength, it would be into/post Bitcoin spot ETF. I keep going back and forth on this argument. My gut inclination is that rotation doesn't come to fruition in this sort of expected way, where it's just a mega catch-up trade and you hit basically a home run on BTC, then you conveniently rotate into ETH and that catches up and altcoins keep going up and everything keeps going up. The caveat there is that my gut instinct has been utter dog shit recently. So perhaps there's some signal in me saying that I don't think the ETH catch-up trade is particularly clear. And that is that ends up being the best trade in the market. I mean, God knows at this point. But even, gut feelings aside, from a purely technical perspective, given the magnitude and duration of this downtrend, etc., we've had so many sort of ETH bottoming type sentiment events, wicks, failed breakdown setups, and still, even if you're very conservative, it's stuck at 054. And even if you give it a bit of space and take the more important range low, 057, we're still below those types of levels. So from you're not really missing out on much at the moment. The market's essentially been flat for a couple of weeks, even with a couple of decent excuses to offer some window of outperformance. So I think post-spot ETF, if there's ever a window for this type of thing, it's post-spot ETF. I still think there's a material risk that the market sees that as a free money trade. Like, yeah, Bitcoin spot ETF, that's obviously bullish for crypto in general, but then ETH has been struggling because we've had this Bitcoin spot ETF overhang for so long. Now that that's gone, we can just rotate into ETH and catch up. There's a risk that catch-up trade doesn't materialize, most certainly if the ETF news gets sold even in the short term. That's going to be a very hard rotation to argue in favor of. ETH USD still looks reasonable. I say reasonable because on a technical level, it's fine. Like, everything is kind of working as it should, right? So we had the larger 1935 breakout that went up. For some ungodly reason, we struggled with a far weaker resistance at 2100, but that also broke, and now we sort of bounced there after a couple of weeks. So all the levels are sort of doing what you'd expect them to do. It's just been very fucking slow. Now that lack of pace you can interpret as, this is just a high market cap asset that takes a while to turn around, and it's not really going to turn around completely until the burden of the Bitcoin spot ETF is lifted, and then it's going to go much more aggressively. I think it's a reasonable argument. The other one is just that the lack of follow through on the breakout is some sign of weakness. In any case, we'll get our resolution post Bitcoin spot ETF. You can come to a more reasonable determination as to whether this is lag or weakness. Again, my gut feeling is that it's weakness, but my gut feeling has been not very good. So maybe it's just lag and this thing breaks. But from a purely TA perspective, there really isn't anything bad going on at the moment in terms of levels. It's kind of breaking and flipping everything. So it could well just be a case of impatience. But there are some other metrics that we'll discuss that are in the back of my mind when it comes to the ETH rotation trade. I wanted to add a couple of contextual points. Sorry, Wassy Lawyer, gonna have to close your tweet. So this is from Velo. I'm just looking at some data here, and there's one specific note that I want to bring up. And this is the 3-month annualized basis. So basically the difference between spot and quarterly futures and sort of extrapolated to a year. And that has crept up quite considerably. So it's up at sort of 20% right now around most major venues. And it really started ramping up not too long ago. So, if we extend here slightly, even as early as mid-December, December 17th, and this is just a couple of weeks ago, the basis was around 10%. And it's ballooned to essentially double that while the market has done nothing. So that is just a lot of speculation, leverage, demand to be long entering the system. It does set up like an attractive sort of delta neutral trade that can be done in size, where you basically buy spot, sell the future, be it a perp or the quarterly, and you lock in the difference. So those types of, we saw a lot of those in the bull market, like delta neutral basis arbitrage type trades. But it's also an indicator in itself of how much demand to be long there is in the market. And this is pretty aggressive. So essentially, the quarter, it doesn't really work in, technically, mathematically, from 10 to 20%, you could argue that the annualized quarterly basis doubled, while the market kind of didn't do anything and just went sideways. So the market is getting quite long, or the demand to be long has increased without a corresponding increase in price. So that's just kind of one thing to bear in mind. It's not necessarily like a super scary signal, but it does give some indication that there is just a lot of participation into this news event itself. But it does give some sort of, the risk-free rate. It's not really risk-free, but how should I put this? It's not the risk-free rate, but some people will just eyeball the difference between spot and futures on BTC and look at the basis and say, well, yeah, if you're in crypto and you don't want to take directional risk, that's kind of the low risk yield you can get in the space, because you can put on a ton of trade into this size, and on altcoins as well, but to a smaller extent, that's more size constrained. In general, you could see this. I saw this described as a sort of moving average of funding. That's not a terrible way to look at it by any means. And so, you could, from those premises, argue that funding has been going up while you haven't had a corresponding increase in price at the moment. Again, not fatal. If price moves up, that's great, because just means the aggressive participants were right and you essentially get bailed out. So even if funding is high but price goes up, it doesn't really matter because your P&L pays off. The problems arise when you have an expensive cost of borrow. The cost of being long is expensive, like on a perp funding position where you're paying the funding and there's no corresponding increase in price. So you're paying a lot to be in a position that's not paying you, and that can be a tiny bit problematic. The other point that I'll mention is when you get a sort of decently large premium in the quarterly futures like this, like 20% in my mind is decently large. You can get a good future signal from it if the market goes through some sort of flash crash, wick, something scary. And a lot of the time, because those delta neutral type basis trades get unwound very quickly all at the same time on those liquidation cascades, the market will go from contango, where the future is trading at a premium, to spot, and it will just immediately, very quickly, in a very short period of time, become backwardated, which is to say that the future is trading below the spot price. And that lasts for a very small period of time because it's a very attractive arbitrage. But in terms of okay, the liquidations are over and that was a mispricing or a dislocation that was attractive to punt, like some sort of bottom signal essentially. If you see these big run-ups in premiums that get completely washed out and go back to baseline or even negative, those tend to be quite good short to medium term trade signals. Just something to bear in mind. And I wanted to highlight the ramp up in aggression into a news event. The other thing I wanted to mention is the altcoin dominance by open interest has flipped BTC according to CoinLise. Now, this metric isn't imperfect because the CME is now the number one venue. And therefore, you could argue that it hasn't flipped BTC. But in general, even if you were to ignore the specific BTC flipping side of things, if you look at the amount of open interest, as well as the volume, but also open interest in non-BTC, non-Ethereum terms, there is a fuck ton of speculation in the altcoin market, especially relative to just sort of recent levels. But even by historical terms, we are really up there in terms of just how much alt punting there is at the moment. And that's very much on the hot side. So essentially, the big picture is you have a very telegraphed news event, or something that we've been riding for a while. The market is up a lot. The market continues to want to be long, as we saw in the ramp up in quarterly basis. And we also have altcoin dominance by open interest just mooning as well. Not to mention that this doesn't reflect the on-chain stuff and the meme coin stuff and things that aren't happening on centralized exchanges. Like, it's hot. Like, that's all it is. I've stayed away from the red button for the time being because there just haven't been any setups. But with how this is setting up contextually, if I get a red button set up, like of the type we discussed, I think around the news event is probably going to be your best bet. And the alternative to that is just a fucking melt up and everything goes up, which is completely plausible. And to be completely frank, given the absence of recent high time frame signals, like from the monthly and the weekly, realistically, either the market kind of cools off a little bit post, by the time we have the next show, or in the next kind of 2 weeks around the spot ETF, in which case that could facilitate some high time frame entries or even just medium time frame entries. If that doesn't happen and the market just melts up, I'll probably just not participate realistically. I like to keep it honest around here. I was probably way too conservative when we had the monthly signal above 35K. I thought, yeah, well, is it really worth getting it? This monthly close was at 37 and I had resistance at 44. Do I really want to ride 37 to 44? I was basically a bit slow and complacent on acting on that specific leg. And so if the market just shatters through everything, that's just going to be an L in terms of a missed move. So, just keeping it real. What else did I want to talk about? No, I think that's it mostly. Alts have continued to be interesting. I've redone my watch list, as you can see here. If you no one can blame you for just punting altcoins and sort of ignoring the BTC picture, and you've been rewarded for it. This is what my watch list looks like at the moment. If you want me to add or remove anything, let me know. We saw the Ethereum catch-up trade, not so much manifesting in Ethereum terms, but people just leapfrog the risk curve and go straight for Ethereum proxy bets. Arbitrum is one of them. I don't really see the value in adding levels to this thing. Realistically, I think most market participants, depending on which chart or whatever they use at this point, are going to be looking for an all-time high break acceleration type of setup. AVAX has been a bit weirder or, weaker. The L1 sort of Solana and AVAX trade has sort of gone back and forth recently. I don't have a technical setup on this quite yet, and I mean, it's up so fucking much, and we've got spot. Like, realistically, guys, if I'm going to be punting alts, it'll be post-spot ETF. And being completely candid, the way that that's most likely to manifest is that if the market just straight fucking continues to melt up for like 1 or 2 weeks post-Bitcoin spot ETF, I'll probably just assume that altcoins are going to continue as well, and the whole risk rotation plays out and become much, much more active in that sector. So that's really the landscape there. So AVAX, I've added AXS. I don't exactly remember how that made it to my watch list. Very sort of old coin, but local uptrend. Sure, Bonk I just had for meme purposes and to get a sense of Solana ecosystem sentiment / as a proxy measurement there. DOT was one of the better performers more recently. From a purely technical perspective, again, I think the market is in very sort of simple chart construction mode where you look for big range levels, all-time highs or whatever, and then if things are good enough, look to break those and mimic the sort of injective style all-time high breakout continuation. FTM as well, just sort of approaching these potential acceleration gates if the market allows them. So it's these types of setups where if there's no de-risking in or around the Bitcoin spot ETF, sort of in the 0 to 2 weeks, realistically 0 to 1 week after we get the announcement, I will just sort of prioritize these by breakout hierarchy, if you will. And then as soon as they breach these multi-month, multi-week levels, I'll probably give it a go on the momentum continuation side to see if there's any juice left in this thing. Injective as well, very self-explanatory. This thing's been insane. I think this is one of the levels we spoke about ages ago. Just lost track of it and then blinked and it had doubled or tripled. I mean, that's crypto for you. But the market at this point doesn't really need a ton of convincing that stuff at all-time highs is good if you're bullish. I've added JTO as well, similar to Bonk and Sol. Just want to get an idea of what the momentum in that ecosystem is and how much juice there is left in terms of interest. Matic as well, high cap that did all right-ish recently, although to be completely honest, I really didn't like the USD chart on this thing. So the likelihood that I pump this one specifically is quite low. Mina, another just kind of hot one, and this is the kind of stuff that I'm talking about when I make reference to large breakout levels and looking for acceleration. It's this type of stuff, like nice round numbers, weekly and daily range highs. Those are going to be my focus if there is no de-risking in or around the Bitcoin spot ETF. What else? I've got Nia. I think it was just strong on probably this week that it made it to my watch list. So no super obvious big range breakout level there, but still interesting. OP, again, it's already done the job, but this is the kind of stuff that I'm talking about. Sort of nice $3 round number and centralized exchange high, just sort of breakout trading through there. And even, from $3 to $4, that's a non-trivial move, especially if you've got some leverage on top of it. Ordinals as a kind of hot, Ordi rather, as a hot new altcoin. Not doing too well today, but hey ho. Hasaka coin, just, tearing faces. I'd probably, as mentioned, rejig this list probably this week. So maybe we'll do an Altcoin Thursdays. Shit, if that's interesting, let me know. I think Altcoin Thursdays is a generational top signal. No, we'll try to avoid that. But realistically, if the market looks good and some signals fire off, leave a comment if you want to see Altcoin Thursdays, and we'll kind of go through these and and maybe some more, and create those, that specific watch list of big breakout continuation stuff and see what's cooking. But this thing has just been straight murdering, up only, very shallow pullbacks on intraday timeframes. Solana, again, went through a period of sort of pulling back a little bit and moving sideways. What usually happens with these things that are outlier strong is that as they start to pull back, bears will move their targets lower or expect a bigger pullback. Instead, they get a shallow one, and then it just keeps going. I don't know if that's exactly going to happen in this case, but Solana, look at it on the weekly time frame. There's nothing particularly crazy going on there. My only reservation with this thing is monthly resistance in the form of this cluster, like 100 to 120. But we've seen monthly resistance struggle before, so who knows? And I really don't think that the monthly time frame is the appropriate one for altcoins at this point in the market. I think at most sort of those weekly, daily range levels are important, but realistically, if you're going to be trading pullbacks in these things or trend following or doing whatever, it has to be on intraday timeframes. They're just too quick, and things are moving too quickly for your nice, convenient sort of high time frame technical pullback. Wait 2 months and the market moves. STX and TIA as well. TIA's kind of in my mental basket of new coin type of stuff. Uni was strong for like a day, and we saw some DeFi 1.0 moves. This one could end up being interesting. Like, I think the $7 sort of range high here, $7 to $8, could be an interesting link style range break. I just have a bit of PTSD around DeFi 1.0 coins. I traded them like absolute shit, but we'll keep tabs on this. WorldCoin had a squeeze on this day, I remember, on Twitter, so interesting to see where it goes from there, and that's really it. I know that was a lot without saying much, but I just essentially wanted to share my altcoin watch list and my reasoning around it, that the likelihood of that BTC prints a high time frame swing trade setup is quite low at the moment, so if it just fucking melts up, instead of chasing it, I will probably be more altcoin oriented and look for big breakout level moves on those rather than BTC oriented trades. My views on that may change. I still need to finish my yearly personal review from last year before smacking this year with too much enthusiasm. But hopefully this was somewhat helpful. That's all I've got. Hope you've all had a fantastic Christmas and New Year, as mentioned. Let's make some good decisions this year, and I look forward to sharing whatever makes sense in my broken little head with all of you. I've been rambling for way too long. Thank you to Woo for supporting the show. Links available in the description below. Stay safe. These news events, even if they seem innocent, if you mistype a zero, if your leverage is too high, or you're zoomed in on micro timeframes and lose track of where you are contextually, it can cost you. So if in doubt, you can just wait and trade after the fact. If you're going to trade the event itself, that's completely fine, but let the volatility do the work for you, not the leverage. That's all from me. Have a wonderful start to your week, year, and I'll see you later. Bye-bye.